Hello, everyone. Good afternoon. Hello, hello. Um, Thank you all for joining us today. I'm just going to give it a couple more seconds before we begin as people start to trickle in and settle in for this amazing presentation. We are very happy to have you all here, and we have a lot of good information to share with you all today. So while people are still trickling in, I'll just begin very shortly. So welcome to the Direct Pay 101 webinar. We have a great session planned for you all today where we will cover the basics of direct pay, the IRS process, including pre-filing registration and filing your taxes. But before we begin, I want to share a very quick disclaimer that this webinar is for general education purposes only and does not constitute as legal or tax advice. So with that being said, we will start our program. Before we dive into the details of direct pay, I'd like to take a moment to acknowledge that we are all tuning in from different areas of the country. Let us recognize that we are on the traditional lands of Indigenous people who have stewarded this land for generations across what is now known as the United States. Tribal nations, including the Adawa, Cherokee, Navajo, Apache, Kickapoo, and so many others have maintained deep connections to the land, the water, and ecosystem, despite histories of displacement, colonization, and ongoing challenges to sovereignty. We recognize and honor the resilience, contribution, and cultural heritage of Indigenous communities, both past and present. As we engage in this work today, let us commit to learning from Indigenous knowledge, supporting Native-led initiatives, and advocating for justice, sovereignty, and environmental stewardship. Again, I just want to express my gratitude to each and every one of you for tuning in and for being present with us today. So a little bit about me. My name is April Parker. I serve as the Energy and Climate Change Coordinator at Faith in Place. And Faith in Place is a nonprofit organization with a mission to empower people of diverse faiths and spiritualities to be leaders in advancing environmental and racial justice. We provide resources to educate, to connect, and advocate for healthier communities. So Faith in Place is a part of a larger network, a national network called Interfaith Power and Light, or the IPL for short, which is a coalition of organizations working together to put faith into action for safe climate and environmental justice. This webinar is hosted by the IPL-DMV in partnership with Georgia Interfaith Power and Light, Minnesota Interfaith Power and Light, Faith in Place, the Congressional Progressive Caucus Center, or the CPCC, Lawyers for Good Government, or L4GG, and Giraffe Financial. We have an amazing lineup of speakers today. We have AC Mayer, who is the supervising attorney specializing in clean energy and tax at Lawyer for Good Government. We have the amazing, incredible Jessica Juarez Scruggs, who is the training and capacity building director at the Congressional Progressive Caucus Center. And last but not least, we have Jason Prince, who is the founder and CEO of Giraffe Financial. So our agenda today is basically how direct pay works and who is eligible, what to expect under the new administration, filing details and deadlines, and how Giraffe Financial can support your congregation through the process. So with that being said, I will pass it off to Jessica. Thank you.
Hi, everybody. I'm so glad to be here with everyone, and I will try to get through my part really quickly so we have lots of time for AC and Jason and Brett and everyone to fill in more. But I'm going to give you the real basics of direct pay, and then we'll get more into the details. So we'll jump in here. So direct pay is a really exciting piece of the Inflation Reduction Act because for the first time ever, it allows nonprofits and tax-exempt entities like churches, mosques, synagogues, houses of worship to access something that for-profit corporations have been able to access for a while. And that is some tax credits that help build clean energy infrastructure. So it means that it's tax-free cash funding since you're tax-exempt entities. If you complete a project, you actually get cash from the IRS. It comes in the form of a refund, so you have to do the project and then you get it. And it is to build renewable energy infrastructure everything from solar, wind, ground source geothermal, EV chargers, and EV fleet vehicles in some places. We'll go into more detail later, I promise. But direct pay will allow our communities to really create sustainable energy infrastructure, make ourselves more resilient to climate disasters, create high quality jobs in the communities where we live, and expand the energy that's owned by our communities. And if we do it right, we can maximize economic and racial justice in the process. Can we go to the next slide? So many of you may be here saying, is this still a thing? I've heard a lot about freezes, and is this even still worth going for? I'm here to tell you that while nothing is without risk in this moment, yes, this is something that is still worth going for. This is still happening. So there's a couple of reasons. One is that withholding funds that have been appropriated by Congress is illegal. But more importantly, this isn't funds in the sense of a grant or some of the things that you may be hearing about being frozen. It's actually a tax credit, which means it's a completely different, completely different entity, completely different way of coming into the world, coming into your bank account. And it is still happening. The portal is open. People are pre-registering. People are filing right now as we speak. Um, Direct pay is also really popular across the aisle. There are a number of people in both parties who are really supportive of these tax credits. And even though the tax debate, I'm sure these tax credits will come up as part of that, um, those of us who work on it every day feel really confident that this is something that we can defend because there are so many people across the country who've benefited from this tax credit, from industry folks to community folks. And like I said, it has champions on both sides of the aisle. Um, but even in a worst case scenario where the direct pay tax credits were to go away, most of the time, when Congress puts new tax law into the world, it takes a while to come into effect. So it would come into effect the next tax year. So say that we lost this fight, direct pay tax credits go away, that bill passes in the summer or the fall, it wouldn't go into effect until tax year 2026 or later, depending on when the bill passed. So anything that's done in the short term, if you're looking at something like putting solar on a house of worship, that's a quick project. It can be done quickly, and that could actually be done before any of these changes would come into effect. So what I want to, and then even if that, even in the worst case scenario, this is already bubbling and people are already taking the step and seeing the benefits. And so there's other clean energy money out there. So I really want to give you as much confidence as I can that the to bring resiliency to your community, to create, to save money on energy, and to create an asset that your community can own. So nobody knows what will happen in the future, but we do feel like this is something that we can be confident moving forward with. I'm happy to answer more questions about that as we go on, but we can go to the next slide. So really quickly, I'm just going to talk through the entities that are eligible and the technologies that are eligible, and then we're going to go in more detail later. But as I said, houses of worship, schools, public buildings, rural electric co-ops, town halls, senior centers, libraries, tribal government, basically tax exempt union halls, tax exempt entities are eligible for these credits. And we can go to the next slide. And there's a number of technologies that are available. We're going to talk a little bit more about how each of them work. And this is not a complete list, but the ones that we see most often, we see solar, wind, and geothermal electric. Those are available for the ITC and the PTC. Again, we'll talk about this more later, but those you get a percentage of the project cost back, or you get an amount per kilowatt hour, depending on which type of credit you use. For the most part, unless you're doing something that's giant, like a utility scale project, if you're putting an energy asset on a building, like that kind of size, you're usually going to go for the production tax credit, the PTC, which is a percentage of the project cost that you would get in a lump sum payment after the project, what's called placed in service, goes into like you turn it on, right? There's also commercial clean vehicles. So if you're purchasing a van or a bus, or a fleet vehicle, like a regular sedan that's an EV vehicle, those have a flat rate that they can get back. Um, there's also ground source heat pumps. So unfortunately not air source, but ground source if it's coming from buried in the ground there. Those are the ones. And then energy storage like batteries that are connected to a solar or not connected to, so if connected or not, either one. And then in some communities, electric vehicle chargers are also eligible. It depends on where you are located. Next one. And this is the last one that I'm going to go through, and then I'm going to hand it over. Again, we can go into this much more in detail. I'm not going to read the chart to you, but I think the like headline is that the ITC, right, it is like a lump sum. The PTC is production, so that's like you're getting an amount per kilowatt hour, the amount of energy that you're creating, you get a little bit back over a longer period of time. Generally speaking, I think I said this backward earlier, but generally speaking, the PTC is something you'd use for a really big project, and the ITC usually pencils out best. The investment tax credit, that's a lump sum, that usually pencils out best for smaller projects. So most of the folks that are community-based organizations that we're working with, we see going for the ITC. Um, and then there, as I said, there's some amounts per vehicle, and there's some other like ways that that can change. The ITC, that lump sum payment, depending on how you stack the different pieces of the tax credit, you can get between 30 and up to 70 if you stack every single one of them. I will say I have seen in my own experience in doing this for the last few years, we usually see people get up to 50. I don't think I've seen anyone get to 70 yet, but I'd love to see it happen. So that's the very basics. And I will take one moment to say that the Congressional Progressive Caucus Center, we're here to support communities across the country making their voices heard in the policies that are passing through Congress and also the policies that have already passed becoming law and how they become a reality on the ground. Our team is working really hard on direct pay, and we're here to help with questions and support, whether that you're doing an advocacy campaign to get your community to take up direct pay as a public project, or you're a community-based organization and you're trying to do a project yourself. So we'll drop some resources in the chat later. But our team is here to help if we can help you navigate these somewhat complicated waters. And we do that hand in glove with my friend AC, who I'm going to turn it over to next.
So hi, I'm AC Meyer. I'm the supervising tax and clean energy attorney with Lawyers for Good Government. I'm gonna be talking a little bit about the future of direct pay, kind of building on what Jessica's already said here. Um, and I'm gonna step forward to the next slide. This is kind of just I have to say it. So I'm a lawyer. I'm not your lawyer. Anything that I'm saying here is provided for informational and educational purposes and isn't to create an attorney-client relationship between your organization and my organization. And with that out of the way, please don't punch my bar card, all of that formal stuff. Uh, Moving on to the next slide. So this is building on a lot of what Jessica already mentioned about the credits are still there. They are not discretionary and they're not affected by funding freezes. So you may have heard people talk about grants being frozen, etc. These credits are not impacted by those freezes. Treasury and the IRS have confirmed this in response to direct questions about it in their office hours. We have seen Treasury and IRS continue to issue checks on this after the change in administrations, after the executive orders, the checks are still coming out. We've even seen them including late payment interest on checks that have been delayed, and we'll talk a little bit about some of those delays that are happening later. The upshot is those are not intentional delays. Those are not somebody trying to shut this down. It's just processing is taking a little longer than the IRS expected. Um, the IRS will notify you if there's an issue with the return. So a return won't just go into, an information void and with no idea of what's going on. If there is a problem, they will reach out via mail so via physical mail, and they will tell you. So monitor any addresses or mail drops that you use with the IRS that you would put with any filings. Um, but the general upshot is projects that were completed and placed in service in 2024 cannot be affected because we can't have retroactive legislation. Projects completed in 2025 are likely to still be safe. Projects in 2026 and beyond, it's a little bit more difficult to predict. We'll know more in a few months. Uh, but obviously, right now, trying to predict exactly what the current administration is going to do and exactly what might get through Congress is, not the most accurate process at the moment. Kind of next slide. So if you've heard about delays or have filed last year and are still waiting, one of the biggest things is that paper filings have to be manually processed, and that manual processing is extremely labor intensive. The IRS and other agencies are currently experiencing staffing shortages, and that's holding up some of those paper filing processing. And also, uh, I think the IRS really didn't anticipate as many people filing paper returns as filed paper returns this past year. Part of that is that the e-filing system providers were not ready at the beginning of tax filing season to provide these forms in e-filing systems. So a lot of entities had no choice but to paper file. And I think the IRS initially thought that there would be more opportunities for people to electronically file and run through those kind of streamlined electronic systems. And the result is that we have a combination of many more paper filings than anticipated, fewer IRS resources, and it's just taking them a long time to get through paperwork. This is not being intentionally delayed outside of the kind of follow-on effect of if we cut their staffing, they'll take longer, but there's not a specific targeting of these credits. If you've filed already, you can check on the status of your filing. There is the secure messaging function in the pre-registration tool. There's the email, this monstrosity irs.elective.payment.or.transfer.of.credit email address. You can reach out there. Alternatively, the IRS officially lists this 800 number as their contact. However, what we've seen is that most nonprofits get better results from calling the nonprofit line, which is that 877 number, and that connects directly with the IRS nonprofit division. And if you mention you want to check on the status of a Form 990, they will be able to help you with that. They have a little bit more familiarity with what's going on there. And next slide. And so what's going on with the future? Well, we are cautiously optimistic about 2026 and beyond because the underlying credits in this program are very popular with industry, and these are the same credits that would be used for direct pay. So entities, a church that is putting solar panels on its roof is using the same credit as a multi-million dollar, several hundred megawatt solar farm that may have a 4-year project timeline. These are the same credits underneath everything else. So because of that, there are some very well-moneyed, very well-connected power companies, other entities that are working with utility scale projects that are using these credits and like these credits and want them to continue. And so we are seeing already some lobbying in defense of these credits uh, in red areas. For example, I think there are now 21, I believe, uh, conservative legislators that have signed on to a letter suggesting that these credits should be retained going forward and should not be wholesale eliminated. Part of this also is we're seeing something like 80% of the dollars from credits are going to red districts to create jobs there. We've seen a five-fold increase in the US capacity to produce solar panels since these credits were enacted in 2022. Most of these increase in capacity are in locations that are in conservative states areas and are people are seeing those jobs be created. We're seeing these plants be built. So that's creating a lot of kind of push to at least not wholesale repeal these credits. Um, and kind of as Jessica mentioned earlier, any changes to the legislative underlying legislation are likely not going to be effective until 2026. Part of that is because there are these large projects with multi-year timelines, and because nobody likes having the rules change midway through a project, the way that tax laws typically change is they will be effective for projects that begin construction on or after January 1st of the year after the change has been made to legislation. So if changes were made in 2025, the changes would likely not be effective until January 1st, 2026. And anything that started construction before that would likely be grandfathered into the old rules. Even if there are regulatory changes, the majority of the credit pieces are part of statutory law. So regulatory changes can really only nibble at the edges. And even those are still subject to the normal 180-day notice comment period. So we would have time to react, have time to issue comments on that. And next slide. And now just we're going to do a quick overview of the filing process. I'm kind of going to jump through it fairly quickly and then hand off after this to Giraffe, who can talk you through a little bit more about the process. But next slide. So the way it works is, first of all, you register your project through the IRS portal. You get a unique registration number and you submit some documentation about the project, when it's placed in service, how much it costs, etc. This kind of gives the IRS a chance to do. It's not officially a pre-audit, but it is kind of an audit light that helps you understand what documentation you will want to have in your records and just what you need to know to have that substantiated. Once you have that registration number, you actually would make a pardon me, you would make a tax filing and you would reflect that registration number on the tax return. And these returns are due 4.5 months after the end of a taxable year. Usually that's a calendar year. There are some entities that use fiscal years. Your accounting group will know about that. And then once the taxes are filed, the IRS would then issue a payment in the same way that they would for any other refundable tax credit. So it's kind of you're synthetically making a tax filing and they're paying back the credit as though it's an overpayment of taxes. But it is a cash payment, so it's not something where you need to have tax liability to get the money for this. Next slide. So essentially it's one step at a time, kind of look at it, find out what projects you want to do, what your timeline is, when your project is going to be complete, what your tax year is going to be. Some of that is just work with people. Most cases, again, for smaller entities, it's going to be a calendar year, but double check that with your accounting team. Use the pre-filing registration portal, then file the tax forms. There's slightly different forms depending on the specific credit that you're looking at, whether it's solar or electric vehicle charging, or say an electric vehicle. We've seen that for like Ford Transit electrics for church vehicles, those sorts of things. And then once the forms are filed, you wait and you get paid out through a check. Typically, we've seen these be paper checks mailed back to the institutions. So again, you want to make sure that you're monitoring whatever address you put on your tax forms. And next slide. Okay, this is just a visualization of how the forms work with each other. So for an EV, for electric vehicles, you have a 8936 Schedule A, that's the tiny fish for each vehicle. That feeds into the total vehicle credits on 8936, which feeds into another form, the 3800, which is all clean energy credits, which then feeds into the overall tax form. It's just kind of a building block and everything kind of stacks that way. Next slide. if you have issues remembering that, and like I understand not everybody is as insane as I am and going into tax law and finding this fun, uh, please don't find this fun. It's not a great life. Seriously though, we have this additional support at L4GG, the direct pay filing, and this link will be in the slides that are distributed afterwards. And next slide. And if you can't remember all of that, our Clean Energy Tax Navigator can. Next slide. I like to describe the Navigator, which is linked here on this slide, as the BuzzFeed quiz of clean energy tax credits. It will kind of help you walk through, ask a few questions about your proposed project, and help you understand which credits you may or may not be eligible for. And again, that's linked on this slide. They'll be available after the presentation. And with that, I'm going to hand off over to our friends at Giraffe, who can talk you through a little bit of the filing process with them and the services that they provide.
Thank you so much, AC. My name is Jason Prince from Giraffe, and I'd like to build on what has just been described as the opportunity for direct pay tax credits. And I'm going to offer a little bit of tips and tricks on how to do it and also describe our services in case you'd like help. Really quickly on me, I'm actually traveling, so excuse me for the background. I'm in a hotel room today at a conference, but I've been doing incentives for clean technologies for over the last dozen years. And I spent a number of those years at a nonprofit called Rocky Mountain Institute. When I saw the Inflation Reduction Act, really kind of like what Jessica was describing at the beginning, it was this great new opportunity for other nonprofits to take advantage of these credits. However, because I'd spent a fair bit of time working in the tax credit landscape on the private sector, I realized how challenging it was. And so we launched this company, Giraffe. It has a kind of funny sounding name, but you'll notice it has the letters IRA in the middle for the Inflation Reduction Act. And the whole purpose of the organization was to try to make it easy for organizations, including all types of congregations, to do this. There's a fair bit there. And what I want to do in this presentation is take a few minutes to just offer you some tips and tricks if you wanted to do it yourself, and also describe our services in case you wanted a hand along the way. Next slide, please. So the real thing that's important here is you're the ones doing the hard work. Your congregations are the ones who are actually deploying these technologies, whether it's putting solar up on the roof or getting a electric vehicle, you're doing the hard work. And we want to make sure that you get every dollar that you deserve. And so we've really been focused on this space. We've to date, really since the November 15th, 2024 filing, been really focused on this, and I've helped over 50 organizations and 100 projects. And we've helped file for over $10 million of these credits. So we have a fair bit of experience doing this, and we wanted to share some lessons learned from that experience. The next slide, please. So I'm going to step through a few of the steps, a few of the pieces along the way that you might want to take consideration of. The reality is there is this requirement for pre-filing, which is kind of that initial step, as AC was describing. The IRS does a bit of a review and then we'll give you a number. One of the things that we've found has tripped people up a little bit is the fact that when you do your pre-filing registration, you need to create an account with this IRS portal. And to create an account, you need to use this pathway, so to speak, called ID.me. And ID.me is a service that's relevant for taxpayers across the country to handle a number of things related to your personal taxpayer, but it's requiring a social security number or an SSN. And so one thing that's come up is, who is the individual at the organization that is authorized to attest to the validity of the credit on behalf of the congregation. And so you need to have really an individual who uses their own ID.me account and do this on behalf of the congregation. You can't really create an ID.me account for the congregation. It does need to be an individual. And one thing that has arisen is that, let's say someone creates the account, that person is going to be responsible for getting those pre-filing registration numbers, which the IRS issues. And if that person leaves the organization, then there could be some trouble actually getting access to that account. So we do encourage that anytime you create an account for your congregation, you have at least two individuals that have ID.me accounts that can become officers of that account so they can access it and you have a little bit of redundancy. Another thing that we've come across is that the EIN, or employer identification number, which is essentially the unique identifier for any congregation, is something that you need to be able to understand how that entity relates to others. And so, for example, we've had instances where, in the faith-based world, there's an entity that actually rolls up to a parent company, and it's that parent company that has an EIN that we need to file for. So it's really just understanding, how you relate to your, is it the presbytery? Is it to the different types of entities within the congregation? And then there's this step where you upload documents. And, as mentioned, the IRS is going to do a cursory review. They're going to take a little bit of time to review the information that you submit. So let's say you have a solar project and you want to pre-file for the solar project. They'll ask you to upload a few documents. And what we have found is the less is more. If you upload a lot of information to them, they might get lost, and they might miss the forest through the trees. And so what we've really encouraged people to do is, if there's a contract, let's say, that you have with your solar installer, instead of uploading a 20-page contract, just maybe take the first page or two that makes it very clear that this installer is going to install solar at your congregation's address. And maybe just that first page or two is enough. And then the IRS staffer who's reviewing it, they're not going to go down the rabbit hole and unfortunately get confused. They'll just see the bare bones, the basics that they need. And as I mentioned, IRS staffers, the thing that I want to clarify is they are real people and they are doing this work day in, day out. We speak to them probably on a weekly basis, and they're actually quite nice. So I do appreciate that people are sometimes a little concerned about the IRS as a scary organization. But honestly, I've had really great experiences with the IRS staff. And so we encourage you, if you ever have questions, you can feel free to reach out to them. And in addition, they actually have a messaging portal that they rolled out not too long ago on the IRS pre-filing registration website. And so you can actually message to staff directly through that portal. So those are a few tips and tricks for pre-filing. They have a user guide. It's about a 75-page document, so we haven't found that particularly useful, but there are other groups like CPCC and L4GG that have provided some additional guidance on how to use the pre-filing portal, and these were some additional tricks that we found. The next slide, please. So on the filing piece, and AC spoke to this, there's this first question of paper filing versus electronic filing. And on the top right, you can see about a year ago, the IRS in this publication 5817, they did say to everyone that electronic return filing is strongly encouraged. For some groups, it was always required, but they really said, hey, we would encourage you all to electronically file. And then what happened, if I look at the bottom right, about October, and this is exactly what AC was saying, the IRS recognized that some of the software providers weren't ready to e-file, to electronically file, and so they granted an extension. We think that going forward, the best approach, both from a requirement standpoint, but also from a just being effective standpoint, is that you should, if you can, e-file. The IRS is overwhelmed with the paper filing and they're taking a very long time to process it. And so to make sure that you have a record that things were filed and you can prove that in fact it was submitted at this date, and to have things processed quicker, we do encourage electronic filing. There is the flip side is if you're not in a hurry to get your money, in theory, IRS will pay you interest. We're not seeing exactly how consistently that's been applied, but in theory, after 45 days, they're supposed to pay interest if they haven't yet paid you. The other thing that I would add on to what AC said in terms of if you are in a position where you've submitted something to the IRS, but you haven't heard back, we've had some success on both behalf of our clients where we get power of attorney and we submit this form 442, or we've encouraged our clients to go ahead and submit on their behalf the form 442. You can actually ask them when you call into the IRS helplines about this form. And it's essentially a taxpayer inquiry form that says, hey, I'm reaching out because I submitted my filing and I still haven't heard back. And we've heard that we've heard both back from the IRS that allows them to kind of prioritize these returns and look into it and give you an answer, and also hopefully expedite things. Next slide, please. The last tip and trick that I want to really focus on is the compliance piece. So one thing that's, again, when you think about the IRS, you need to understand is the IRS, just like any individual taxpayer, they do have the right to audit you. And for things like a solar project, they in theory could audit you for up to 5 years. And if they audit you, they're going to say, hey, we're reviewing the fact that we paid you this money, and we're trying to understand if in fact it was for a valid project. And there's a number of things that can trigger what is considered recapture, meaning the IRS can say, hey, we gave you this money, these direct pay funds, but something was wrong here. We don't actually think that we should have. We're going to take that back from you. And it's really simple things that I don't think would be an issue for any congregation. However, it is worth just being aware of so that you can make sure that you don't have an accidental trigger of a recapture, and that could potentially put you at risk of an IRS recapture event if they ever audited you. And the main things that you need to really consider are making sure that your project is operational. So do you have a agreement, for example, with someone to do operations and maintenance? If anything were to go down with the system, if there's a hailstorm or something that actually impacts the system, perhaps you might take out property and casualty insurance so that an insurance would come in and pay for that. Or you could always pay for it out of your pocket. But really just wanting to make sure that that system continues to operate. If you think about it, the IRS is saying, hey, we're giving you money because we want you to generate clean electricity. And if the system just sits there and it's not generating electricity, then that could cause an issue. And another thing to consider for recapture is that there should not be a change of ownership of the solar system for the 5-year recapture period. So if your congregation is the one who purchases the system and is the owner that files for the credit, you should maintain that ownership and not sell the facility or the actual congregation itself for those 5 years. So that's kind of the first piece. And then the second piece is record keeping, which relates to recapture. And again, this is really just best practices so that you can save any future hassle. If the IRS were to ever audit you, it's worth being prepared. And what we do for our clients, we put together essentially an audit-ready package. It's all the information, all the documentation that you have about this project in one place, in one nice package. So you can say if anyone ever audited you, hi, IRS, here's all the information ready to go for you. We complied, we kept all the documents, everything is here. And nowadays it's nice you can put this stuff digitally online and just have it saved somewhere as opposed to having to have paper files. But we do think it's really important to have a nice organized package. And the last thing that I would say related to compliance is making sure that you really do understand the tax basis. So what are you claiming a credit on? If it's a 30% credit or even a 70% credit, what is that a credit on? How much did your system cost? And what can you include in the system costs there? There's a consideration of both how grants play into the tax basis and the calculation of your credit, in terms of you should definitely try to stack them, but there is that no excess benefit rule. And also just thinking through all of those nuances and how you calculate the credit, things like domestic content, depending on the system size and so forth, ends up becoming more of an issue for bigger projects. And also things like prevailing wage and apprenticeship rules. It's just basically having all your paperwork in one place. So if you go to the next slide, please. So if all this sounds complicated, it's kind of what AC said. Some of us are, we're specializing in this because we appreciate that there's a fair bit of steps here, and we want you all to feel empowered to go ahead and do the filings on your own. But if you want a hand, a helping hand along the way, the good news is that we can streamline this process and basically handle it on your behalf. the AC mentioned the comparison of the Clean Energy Navigator, which is Lawyers for Good Government's tool, is kind of like a BuzzFeed quiz. I think about what we do if people are familiar with TurboTax or a software program like that, where you effectively have some software platform. You input your information into TurboTax, and then TurboTax files your taxes for you. And that's really what we built Giraffe to do. So we would be able to work with you, collect your information on our website, and then we basically take that information and we do everything, including the credit calculations, all the compliance. We do pre-filing, we take care of the tax forms, we do the electronic filing, and we'll also maintain records for you. And the next slide, please. This shows a little bit more in detail of just what the actual process looks like. So really for Giraffe, we have this great partnership with the IPL, where what we have is a special landing page. You can go to giraffe.financial/IPL, and then you follow these simple steps where basically, as soon as you've placed that project in service, so you installed the solar system or you took delivery of an electric vehicle, as soon as that happens, you go to our website, you submit a credit application, which we think takes about 30 minutes. And then from there, we'll review it really quickly. Within a week or two, we'll get back to you and we'll do the pre-filing. Like I said, we'll do the electronic filing, and then ultimately you'll get the check in the IRS. And we negotiated a special rate with IPL to do this. And one of the things that is important to consider is we will only invoice you our fees after you've received the funds from the IRS. So even if the IRS takes a long time, we don't ever want you to go out of pocket and have to pay us. We don't send you our invoice until you've actually received the direct pay funds. And last slide, please. This is just a quick example. If you go to giraffe.financial/IPL, this is what the homepage will look like. So all you need to do is click register for an account, and then you'll get brought to this next page, please, where there's a couple buttons that you'll click. The first is the account profile. So that just provides us a little bit of information about your congregation. And then you would submit a credit application. So let's say it was a solar project, that would be a renewable energy project under section 48 or 48E. You just click that button and submit a few data points about, how much did the project cost, and upload some documents. And then from there, we really review everything and take it forward. So that's really the last slide that I have. We really do empower you to do this on your own, and we support you to take advantage of this money. At the end of the day, we're all here as service providers to make sure that you get the money you deserve. And if we can be helpful with Giraffe, we are really fortunate to be partnered with IPL and the other entities on this call to try to offer it as a service. If you want someone to just do it and you don't want to do the work yourself and just hand it over, we're happy to help. So thank you so much for really all the organizers of this and all the attendees. I'll pass it back now. I think we should have some time for questions and answers.
If we would like to do the filing ourselves electronically, how do we get hold of those forms to do that? Thank you.
So, kind of unfortunately, there isn't a readily accessible way for non-accountants to get access to these electronic filing systems. The IRS has a limited number of approved e-filing providers, and those are limited to entities like Intuit or Drake Software is another company. And I don't know who Giraffe specifically is using which software, but these are software packages that are sold to accountants and tax preparers and are priced at levels that anticipate somebody using these to prepare returns for hundreds or thousands of clients. So generally, while it would be possible for an individual organization to go out and purchase access to this software, it's generally cost prohibitive to do so. And I think, Jason, you can talk a little bit more about what that looks like. But in general, it's going to mean, as a practical matter, going through an accountant. or somebody that way, because that's going to be much less expensive than going out and acquiring the software directly for your organization. Plus, the learning curve will be significantly better if you go through an accountant versus having to learn the software, because it is targeted to accountants. So it's assuming that the people using the software have a level of familiarity with the forms in the IRS processes. And sorry, Jason, I said I was going to turn it over to you. Now I'm actually going to turn it over to you.
AC, that was perfect. There's a few impediments that the IRS puts in terms of individuals cannot even just go and use the tax prep software, not only for cost, but also there's a requirement to have essentially an electronic filing identification number. So you have to go and kind of get registered as a entity that's able to submit these to the IRS. And so there's a few hurdles to just doing it individually. But what AC said is great. You can use whether it's Giraffe or whether it's a CPA firm that can actually use those tax prep softwares and has a prepared tax identification number and the electronic filing identification number. They'll do it for you.
If I can just add one more thing on ID.me, one thing I want to flag for you as faith leaders is that because many faith structures are hierarchical, figuring out who is the ID.me person. There's really only one per IEN number, so one per, figuring out how that works in your particular faith organization is something that can be a little bit tricky and something that we've run into with a number of folks. So I just want to like call your attention to that, something that you're going to need to figure out of who exactly is the part of the whatever structure you're part of, because it varies from, different faith traditions have different ways of structuring themselves. And so I just want to call that out as a particularly tricky thing that some folks have run into in the faith community. And I want to say that the CPC Center has a monthly standing House of Worship call where we get into a lot of that, and you're welcome to join if you've got questions. We are not lawyers, although often someone from our wonderful friends at L4GG are on. But as AC said, they're lawyers, but not your lawyer. But we are happy to help you think through that generally. And then again, the navigator is another great option. But I just wanted to like particularly call that out since because of who we are today, because that can often be a challenge for if you have like a hierarchical structure, figuring out which one is the entity that actually needs to do the filing can sometimes be a little bit tricky.
I have a question, if I may. We're considering a ground source heat pump system, and we have a bid in. It's going to be around $500,000. What would be the fee on Giraffe handling that for us?
Yeah, thanks, Steve. So for a typical system, we take 7% of the value of the credit. So for geothermal heat pumps in particular, there's usually a piece of work that we do called cost segregation, where for something like solar, it's pretty simple. It's like the solar panels. That's what your cost to your system is. For ground source heat pump, because it'll usually connect into the HVAC or the heating, ventilation, air conditioning system, there's usually an opportunity to really evaluate what costs we include. So for instance, when you say $500,000, we would think about, okay, what does that include? Does that include any of the ductwork? Does that include any of the fans? What exactly are we able to? And we'll try to maximize the value of that credit. And then if I just do the quick math, so if we said $500,000 are 7%, so that would be $35,000, and that's too much. And so what we did when we created this partnership with IPL was we put a ceiling. We said it would be a cap on the total cost that we would ever request from any project, even if it was, $1 million plus project. And we set that cap at $20,000. So that's kind of the way that I would think about the math is we would say, normally we say 7% of the value of the project in terms of the credits. And then we would put a cap on it. So we never ended up going too high. And I think, Steve, particularly for geothermal, I think, I do really strongly encourage people to try to do it yourself. Like I come from the nonprofit space. We're not trying to take a lot of money from people. It's more just, it takes time to do this work. For things like geothermal, I really would encourage you to use whether it's Giraffe or another CPA, just because understanding tax basis can be a little bit trickier as compared to if you just bought an electric vehicle, it's pretty straightforward.
Thank you very much.
There are some really good related questions on the chat that I want to make sure we go through. So somebody said, can you add the cost of the power company to test the system as part of your total solar system cost to get direct pay?
It's a good cost, and my answer to that is typically we we need to look at the specific facts and circumstances. So each case is potentially a little bit unique. When the question the person who asked the question was asking about the costs of the utility to do the testing, I'd want to just really understand what that looks like. What was the testing? What was the order of magnitude of the costs? How was it documented? And with that, we would really be able to see, can we include it or not? It's hard for me to give an answer right off the cuff. That goes to kind of the point that Steve just asked about the geothermal system. We typically do, it's called cost segregation, and it essentially looks at, okay, what are all of the costs in the project? So the cost of the solar, if it's solar, the solar panels are obvious, the inverters are obvious, the racking is obvious. When we get to some costs like that, like utility costs, we would want to say, okay, here's the cost. Let's now evaluate, is that a cost that we can include? The IRS uses this language to determine whether or not something should go into the tax basis. Is it integral? Do you need, is it a key part of the system? But for this cost, could the solar system operate? And so I say it's a facts and circumstances determination, because we really want to understand in this particular project, what did that testing look like? How is it called for? And then we would have to be able to make a decision. So I'm sorry I can't give an off the cuff answer. I don't know if anyone else has thoughts on that, but the way I would think about that is we need a little bit more information to make a determination.
So along that thread, so there's another question. Have folks claimed the cost of an electrical upgrade to accommodate a large solar system? And then are insulation upgrades included? I would guess the answer to that is probably no, but the first one I'm curious on.
Yeah, on the electrical upgrades, I think there's definitely a chance that could be included. It's hard to give a definitive answer without more detail. I don't know, AC, if you have any heuristics on that, or if you'd also want to see a bit more detail before making a opinion.
Yeah, I think I'm with you there. We want to know a little bit more specifically about what's being considered.
Okay, somebody else said I have found electrical upgrades for solar are included, which I think makes good sense to me. And then somebody wrote, are air source heat pumps excluded? Yes, unfortunately, air source heat pumps are not part of it, which I feel like is really dumb, but obviously I'm not working in the federal government. Jessica, did you want to say something about that?
Oh, I was just agreeing. It's a badly written part of the law. Unfortunately, it's a big miss. But we wish we wish we could have gotten it through in slightly better form. But yeah, no, unfortunately that was left out.
I will say, and this is going a little bit outside of scope here, but a lot of the states have programs at the state level for air source heat pumps. So it may be worth looking at what's available within your state. Unfortunately, I don't have a list of all 50 states and kind of what's going on everywhere. So at the federal level, no, they're not eligible, but there may still be some state level refunds or even refunds within local areas. Because I think the city of Seattle has done individual refunds outside of what the state of Washington does. And I know state of Washington has done refunds outside of what the federal government is doing. So absolutely look into that. I'm sure there are some, depending on what state or locality you're in. Don't give up just because it's not on a federal level.
I might add, if I may, here in Connecticut, our Eversource, our utility gives $1,500 a ton for air source heat pumps and $4,000 for ground source heat pumps. So yeah, I mean, that can add up to a fair amount of money.
Just a couple more questions to touch on, and then I know it sounds like Jessica, you wanted to share some info about projects. That would be great. People are asking about roof replacements as part of solar. I'm guessing that's probably not included.
Generally, no. So costs that would be necessary for the roof outside of solar are generally not includable. Um, to the extent that there are specific structural upgrades that can be segregated out from the rest of the cost. For example, if the roof couldn't handle the wind loading or the weight of solar panels and had to be structurally upgraded, the cost of those structural upgrades might be includable. However, things like new shingles, other things that are just necessary to make the roof function as a roof, be watertight, etc., be insulated, those are generally not eligible. There are some limited cases where you get into very sophisticated solar systems, where there are solar cells on the top and bottom of the panels, and the roof is highly reflective. You can get a portion of that cost, not the whole cost, um, includable there because the roof is then being used to bounce light back into the bottom of the solar panels and generate electricity. But those are typically more advanced, sophisticated systems. And if you're in that area and considering installing that, that's probably already been accounted for with your contractors, and they should be helping you with that because entities that are installing these should be familiar with generally those types of things. But obviously, reach out to L4GG, reach out to CPCC. Any of the groups here today are happy to help on that.
Thanks, AC. So someone had also asked about grants to fund the rest of the project and the 30% rule, and that, sort of combining different incentives and grants. Could someone speak to that?
I'll jump in again. Sorry, you got to keep listening to me. No, you absolutely can stack grants on top of things. There are some limitations on the types of grants. Kind of the way direct pay looks at things is whether the grants or any funding is restricted versus unrestricted. And in that case, restricted means funding that is specifically for a credit eligible property. So if you receive funding and a grant for specifically solar panels on the roof of the church or on the roof of the worship building, um, that funding is then going to trigger what's called the no excess benefit rule, which says that the combined total of the grant amount plus any direct pay credit can't exceed 100% of the cost of the system. So, for example, if a restricted grant pays for 90% of the cost, then instead of 30% for the credit, the most you could get for the credit would be 10%. It may still be worthwhile to apply for the credit in that case and get you topped up to 100%. Frequently, we find it is still worthwhile to do that. It's just a thing to be aware of when you're calculating the credit amount and when you're working with, for example, Giraffe, just to make sure that they're aware of those grants and that funding source. And then your accountant team can help make sure that you're not claiming more credit than you're allowed under that no excess benefit rule. But the idea is they want to be able to get people up to 100% of the cost, but not over. Uh, and that just keeps making sure that they can spread this around more and that more entities are able to put these systems in place without anybody taking a windfall as a result of it. So it kind of helps keep the funds available for more entities, more people.
And I'll just add on to that, if you are working with philanthropy for your project, knowing that in advance can sometimes be helpful. We've had folks that we've worked with be able to go back to philanthropy and say, if you gave me an unrestricted grant, that would be great. And would let me, choose to use this however I want, and then chose to use it on an infrastructure project. And we're able to actually maximize that credit. So that's not always possible, and it definitely depends on who your funders are and how that grant came into being. But just wanted to point that out, that sometimes that's something that you can do if you know about this in advance. And I'll let other folks weigh in on the question about loans, but in general, if it's something you have to pay back, then it's not a grant. So it wouldn't trigger that excess benefit rule.
And I'll just really quickly chime in on the question regarding Giraffe and our fees. We say it's 7% of the credit, not the total cost of the project. We just take 7% of the credit that you actually receive.
So that was my question. The example of a $500,000 project and your $35,000 fee, is that calculation?
Excuse me, sorry. So if it was a $500,000 project, and then it would be a 30% credit on that. So yeah, excuse me, I think I must have misunderstood. I thought it was a $500,000
I
credit.
just wanted to make sure I understood properly. Thank you.
Yeah. Excuse me for the rough math of the credit.
So I know we're just about at time, but I know folks have lots of good questions, and I know Jessica wanted to share about some projects. I'm happy to stay on for a few minutes if other folks can. We're also recording this, so we'll send it out to everyone. So there's been a couple good questions that I was hoping we could address. I know if folks have to go, you have to go. And thanks to our speakers so much for being here. There's been a couple good questions about the bonus adders and the domestic content stuff. I'm wondering if Jessica, if you would be able to speak to that briefly. I know it can get complicated really quickly. Yeah.
I can do my best. I saw some around the and hopefully AC will save me from myself.
Unfortunately, I have to jump. I've got a commitment 2 minutes ago.
All right, I will do my best to not
Jump
let
off.
people astray.
Nancy, I just want to say quick sorry to jump on you, Jessica. I see your question in the chat. You might want to direct that to Jason over at Giraffe. He has a little bit more information about the ID.me and the EIN question. On that, sorry to jump off. Maddie, feel free to reach out by email if there are other questions that you collect here. Happy to do that. Sorry to sprint away. Cheers.
I will do my very best in AC's stead, but I will say that while AC is not your lawyer but is a lawyer, I am in fact not a lawyer at all. I'm an organizer. So I will do my very best, but I will say so on the different adders, it's essentially you're stacking them on, right? If you can qualify for all of them, you can kind of add them up. Some of them are based on I don't know if we can go back to the slide where they're on. I can maybe talk us through them a bit in more detail, but some of them are based on where the property that you're adding that energy infrastructure to is located, right? Is it located in a low-income community or an energy community? There are some bonus credits attached to that. Others are around domestic content. Domestic content means like, did you use American-made solar panels or what have you? For the most part, those have not actually come into effect yet because of, frankly, the solar production market in the United States hasn't kicked up in the way that they were hoping it would yet. And so most of those have not gone on into effect. And you can essentially say, yes, I did them and get that credit without without having to actually do all of the paperwork. I am not sure whether that will happen this year or not. I think that's like a determination that we're still it could come into effect. I don't think it has yet. But I'm honestly not the right person to ask on that, so you should check. And so then, yes, you can see here there's a 10% adder for an energy community. Energy community is broadly defined as a place where there was a coal plant or some sort of energy infrastructure that's kind of closing down, right? That it may have been impacted by the transition to cleaner energy sources. There's a map. It's very, very useful. You can just look yourself up. The low-income communities, similarly, there's a map you can look up and see if you fall into that. The important thing to understand about the low-income community bonus credit is the only part of this process that has to be done in advance. So everything else is on the back end. And one of the reasons it's great that it's a tax credit is you do the work to qualify for the tax credit, you get the tax credit. Simple. The low-income community bonus credit actually is capped. So there's only a certain amount they give out each year. And you have to do that. There's a window that opens, which we're actually kind of getting to the end of here. The window opens where you'll be sort of first you get first dibs at that money, and then it's rolling from there until they run out of money. last year, not all of the different categories of the low-income community bonus credit were fully subscribed. Some of them did fill up really quickly, though. And the thing that makes it tough is you have to fill out the paperwork and then you have to wait to actually turn your project on until you get that credit. So it can cause a little like bumpiness in the project. Obviously sometimes can be a huge difference in the amount of credit you get. So absolutely worth exploring. And I really encourage you to check the map and go from there. But it does complicate the process, and it sort of inserts a step in the beginning from when once you know about your project, you want to look and see if you're going to qualify for the low income community bonus credit. And then you kind of have to sequence things from there. So it's a tough, it just makes the cut process a little bit more complicated, but very much worth exploring. That is for the ITC. That isn't for like a clean vehicle or an EV charger. So hopefully that answered that question. But basically you should look and see. You should try to stack as many as possible. The other thing is, depending on the size of your project, if you're over a certain size, you will have prevailing wage and apprenticeship requirements. Those are worker protections to make sure that these jobs are good jobs. Most projects on a single building aren't going to hit that threshold. However, we really encourage you to still be working with a union contractor, because they're going to know how to meet those requirements if you do hit that threshold. And even if they don't, that's a way to make sure that the jobs in your community are good jobs that are really going to be family sustaining jobs, and give people a career ladder and all of those great things. So go for unions. Yay, unions. And we have a guide on our website that says a little bit more about how those prevailing wage and apprenticeship requirements work, and how to find a union contractor in your area if there's one available. So I think that's a little bit more on the bonus credits. I'm happy to go into it more.
Yeah, I'll just add briefly. So what I've heard, and anyone feel free to chime in, is that for geothermal, basically almost everything that's installed in the US for that is manufactured domestically. And so like it's just a matter of getting the companies and the contractors to be able to document that but there were like the last I heard is a couple of months ago is they were pretty far along on that. And so like the good thing about geothermal is that you should be able to get hopefully 40% base. Obviously geothermal is really expensive, but that's what I've heard. Solar, it's a little bit harder because so much of it is produced not in the US.
And I'll say that one of the best places to start if you are considering this is starting with an energy audit, and just thinking through what's possible for your property, for the building that you're thinking about. That'll give you a lot more options, and you can kind of compare like what are the costs, what could we actually generate in energy. I think that is a really great step, and we have a really great guide that kind of talks you through the basic steps of embarking on this process and figuring out those, which we can make sure is included in the follow-up materials. It just takes it really step by step, but it can seem overwhelming. There's a lot of steps, but I really want to encourage everyone to think about this, because we have seen not only these kinds of energy infrastructure really save money for a lot of houses of worship, but also really be a way to serve the community and serve your overall mission. We've seen folks use solar to the savings from solar to funnel into, youth programs or food pantries. We've seen houses of worship become resilience centers and then be able to respond to disasters and really be a hub for their community in a way that wouldn't have been possible without that solar battery that kept the lights on during a storm. This can kind of really be a way that we serve our communities in a more expansive way when we take this on, and it's a way to keep some resilience in your own in your own community by lowering those energy bills and making sure you do have reliable power. So I don't want anyone to get intimidated. There's lots of folks who are really excited to help you navigate these waters. So I hope everyone dives in. And I put in the chat earlier, Minnesota IPL and the VC Center team and L4TG and some other friends will be together on Friday to do a very similar conversation to this one. So if you have a friend that you wish had come today and you want to send them to the Friday one, we encourage you to join. We'll be focusing a little bit on some of the opportunities that are available in Minnesota specifically, but feel free to register. We'll also talk about the broader context. And if you have a friend who missed this one, of course you can watch the video, but also we're here on Friday as well if you have other questions that we didn't get to.
Yeah, and I'll just add, we're recording this. We'll send it out to everyone. I'm going to post it on IPL-DMV's YouTube channel and send it around to the IPL network. You know, please feel free to share. I'll also just say that your local IPL for folks can be a really good resource for trying to figure out where to start, you know, what contractors to potentially use, etc. So I'd highly encourage you reach out to your local IPL affiliate. I, you know, work with folks in DC, Maryland, and Northern Virginia. And, you know, we'll be sure to include a link for how to find your IPL affiliate in our follow-up email. I know we're pretty over time, so I think I'm going to go ahead and say we should wrap up. But just wanted to give a huge thanks to our speakers and April from Faith in Place for sort of welcoming and hosting us all. Yeah, thanks everyone. I feel really energized in this time to like get these projects up on houses of worship, and that feels really meaningful. Okay, thanks everyone, and I will send out the recording. Take good care.